Hi, everyone. In this video, I'm going to explain what options trading is in the simplest way possible. Options are contracts that give you the right, but not the obligation to buy or sell a stock at a specific price before a certain date. Instead of owning the stock itself, you're trading the rights around it. There are two main types of options: calls and puts. A call option gives you the right to buy a stock at a set price. You would buy a call if you think the stock is going to go up. If it does, the option becomes more valuable. A put option gives you the right to sell a stock at a set price. You'd buy a put if you think the stock is going to go down. If it drops below the price in your contract, your put, increases in value. But here's the cool part, that you don't have to just buy options. You can also sell them to collect premium. That's the price someone pays you to take the other side of the contract. That's how many traders generate consistent weekly income using strategies like covered calls and cash secured puts. Options can be used for different goals: making money when the market goes up or down, generating income, or even protecting your investments like insurance. However, options aren't risk free. They expire, and if you're not careful, you can lose money fast. So it's important to learn how they work before jumping in. Now that you know the basics, check out my other videos where I show real trade examples. Don't forget to like, subscribe, and let me know in the comments what strategy you'd like to learn next.